Everyone around you is talking about one stock. Your friends won't stop mentioning it. Your social media feed is full of screenshots showing huge profits. Every headline says the same thing. This stock is making ordinary people rich. At first, you ignore the hype. You tell yourself you're going to invest wisely. You promise you'll do your own research. But every day, the stock keeps climbing higher. Your coworker doubles his money. Your cousin buys a new car. Even your neighbor starts giving investment advice. Suddenly, it feels like everyone is getting rich except you. Fear of missing out begins to take over. You stop thinking logically. You start thinking emotionally. You open your investment app. You search for the trending stock. Its price looks incredibly high, but people online keep saying it will go even higher. Comments like, "Buy before it's too late," flood every post. Without researching the company, without reading its financial reports, without understanding why the price is rising, you press the buy button. You feel excited. For a few days, the stock continues rising. Your investment turns green. You smile every time you check your portfolio. You start imagining all the things you'll buy with your future profits. You even convince one of your friends to invest too. This stock can't fail, you tell them. Confidence replaces caution. Soon, you invest even more money. Almost all your savings go into that one stock. You believe you're making the smartest decision of your life. Then, one morning, you wake up to shocking news. The company releases disappointing earnings. Large investors begin selling. The stock starts falling. At first, it's only a small drop. You aren't worried. Everyone online says it's just a temporary dip. So you hold. The next day, the stock falls again. Then again. Then again. Your profits disappear. Soon, you're losing money. Panic spreads across social media. The same people who shouted buy yesterday are now shouting sell. The excitement turns into fear. You don't know what to do. You keep refreshing your portfolio every few minutes. Every refresh brings another loss. Your stomach sinks. You finally sell your shares. The moment you sell, you realize you've lost a huge part of your savings. Weeks later, you decide to learn what actually happened. You discover something important. The crowd wasn't investing. They were chasing excitement. Most people bought because everyone else was buying. Very few understood the business they invested in. Professional investors were already taking profits while the public was rushing in. You had entered the market at the exact moment the hype was strongest. And the hype disappeared just as quickly. That's when you learn one of the biggest lessons in investing. The crowd often feels safest at the most dangerous time. Successful investors don't buy simply because everyone else is buying. They study businesses. They understand risk. They stay patient. Sometimes, they even do the exact opposite of the crowd. You begin investing differently. You research every company before buying. You diversify instead of putting everything into one stock. You ignore flashy headlines. You stop chasing trends. Months pass. Your portfolio grows slowly. Not overnight, not with viral success stories, but with consistency. Your confidence no longer comes from social media. It comes from knowledge. You finally understand that investing isn't about following the loudest voices. It's about making informed decisions when others are driven by emotion. Because in the stock market, following the crowd often leads to buying high and selling low. The smartest investors don't follow the crowd. They follow a plan. And that's how real wealth is built.